Hello, it's Robert Miner with Dynamic Traders Group with their Saturday, March 30th DT Reports video update, abbreviated update from what we have for our regular DT Report subscribers done just for our YouTube subscribers. I'm going to talk about a couple of markets that probably this coming week are going to have some longer term trade setups that you might want to be aware of. And whether you trade the markets I talk about or not, you're going to learn something about how we look at the market, particularly look at multiple time frame trading strategies. So before I take a look at that, if you're interested I usually do a daily update on Twitter. You might follow me on Twitter at Bob@DT. And if you want more information on practical analysis and trade strategies, check out my book, High Probability Trading Strategies, at Amazon.com. Okay, let's get started. First, we'll look at soybeans, then we'll take a look at crude oil. And soybeans is a fantastic market to trade. It's low margin and it really can have at least some very strong trends and lots of opportunities to add to your position if a trend develops as anticipated. So the reason we're looking at soybeans right now is we're in a 2-week period when we might make not only a weekly low but potentially a monthly low, and it's a beautiful example of multiple time frame going from weekly to daily to intraday data to see when all 3 time frames are telling you the same thing. So even if you're whatever reason not interested in trading soybeans, is this will be a good educational lesson on multiple time frame trade analysis and trade strategies. So this is soybeans weekly. It's the November contract, and if we look from the December high, we can see a potential A, then an ABC for a wave B, and then a possible 1, 2, 3, 4, and a 5 to complete a wave C, potentially at least. So if we're just looking at the weekly, we'd say we're probably in the final section of this decline from the December high. And at the very least, we should be at or near making a weekly low. That's a low that's going to last for 3 to 5 weeks. So that itself would be a great setup to consider. The weekly momentums are already dual look back bullish, even though we've had this strong down week this past week. They're dual look back bullish. And we're in this 2-week period. I'm showing just 2 of the time factors. And one is the low to low to low. That's next week. And then this past week was the high to low. And that's usually an extreme time factor. So I suspect this low is going to be complete by next week, and that's real significant. Where are we price-wise? What I'm showing is 127, 162% external retracement of wave 4, and that's the key retracements for the final section of a trend or a counter trend. They're the typical end of wave 5 target zone. So beans are just a few points above that. And that zone coincides with this parallel channel this next week. And I suspect I should put this one on also, so I have them both on together. 2 to 4 from the wave 3 low is just right in that range also this next week. So we got a lot of chart geometry. We got some key price levels, end of wave price levels, and the 78.6% retracement, not too far below that end of wave 5 of C target. Fantastic potential setup coming up here probably just in this next week. Here's the daily. So we keep going down, ratcheting down to smaller and smaller time frames. And again, A, B, 1, 2, 3, 4, 5, probably wave 5, and we've got the same 127, 162% external retracements of the wave 4, and with 78.6% retracement. But look at this wave 5. It's subdivided almost perfectly into 1, 2, 3, 4, and potentially Friday, a big outside down day, but that's potentially within days of completing a major weekly and maybe monthly low. So I'll put the 127, 162% external retracements of wave 4 of 5 in, and that's around 897 to 895, and the 162% external retracement overlaps the 127% of the higher time frame wave 4 perfectly. It's the exact same target. I'm going to go back and erase these for right now. But here we go. We've looked at the weekly. We've looked at the daily. Daily momentums are bearish. But the next daily momentum, bull reversal. In fact, let me go to the 8. It's already oversold. The next daily momentum, bull reversal, which is likely in the next 2 to 3 days, should coincide with a weekly low, a wave 505 low. Man, that's the kind of setup that you look for. And here is the 240-minute data. And again, this is showing how the wave 5 is breaking down into 1, 2, 3, 4, 5, 127, 162% external retracements of wave 4 and 5 already reached on Friday. So we're reaching the extremes of time, of price, of multiple time frame pattern, and dual time frame momentum. Actually, it's going to be triple time frame momentum. So, boy, this is a setup you should really be prepared for in the next, before the end of this coming week. I suspect by Tuesday or Wednesday we'll make that daily bull reversal, and when we do, that should finish off a weekly low and potentially a monthly low. So very significant low potentially. If nothing else, fantastic trade setup, even if it only lasts a few days or a few weeks and doesn't continue on to make a new high, because it's going to be very low risk, very high probability when we make that reversal. Let's take a look. So it's a weekly crude, and it is the June contract. So the weekly momentums have been extreme overbought for many weeks, actually about 2-3 months. But we've only had 2 instances of it making an actual bearish reversal on the weekly momentums. And both times that it did that, the market just went sideways for a couple of weeks. As you know, momentum reversal simply means the rate of change slows down, doesn't necessarily mean that a price high or low is going to be significant. And you never know that in advance, but you do know when we make a dual time frame momentum reversal, more than likely, that's how I stated in our reports, will be sideways to down for at least 3 to 4 weeks. In this case, in both cases, it was only about 2 weeks. Didn't even make it into the 3-week mark that they were sideways to down after that loss of momentum. Well, we're in that same position again right now of being at a time extreme from when we're likely to make a weekly bearish reversal. Momentum bearish reversal, but it hasn't been signaled yet, and it will be signaled in any week that crude makes a lower close. And since we're at really the 2-week extreme was the prior 2 weeks, week ending March 22nd, and that just this past week, March 29th, were a couple extreme targets for a weekly. I suspect that the closing high of the weekly has been made this week, and next week will probably trade higher, as you'll see in a minute in the daily, but more than likely that'll complete, when it completes the daily high, it'll complete the weekly high. Again, multiple time frame position. So this is the daily, and of course it's been net bullish for several months since the end of last year, the end of December, but it's been this fits and starts. Each new high has been slightly higher high, but it's not been a raging bull market by any means, but just steady chop forward. Well, now we're in that position at least to have a high similar to these past highs, where it went sideways for a couple of weeks or a week or so, and probably at a much higher time frame high. But the daily momentums are bullish, and that usually means that we're 3 to 4 days away from a bear reversal of the daily momentums, but the next one that's made should coincide with a weekly high. And the extreme on the upside ought to be around the 62% retracement. The ideal upside is around 61.20 to 61.94. And that coincides very closely with this resistance line that's contained the advance over the past few months. So we're not calling for a high yet, but by the end of this coming week, more than likely we'll make a high that's going to last a few weeks, and I think potentially would be a higher time frame high than either of the weekly highs. We've really made 3 of them over the last couple of months. All 3 of those have just resulted in sideways trading for 2 to 3 weeks. And more than likely where it's going to be at a higher time frame than that. And partly because the last week was 100% time retracement of the decline. But you can see that in the same amount of time, 12 weeks, that we lost 42%. And the 13 weeks since then, we've only regained about 50% of that loss. So there isn't the buying power that there was, the selling power coming down. And it really looks like it's struggling up and we're going to roll over. So just beware of that if you happen to be long any crude oil sensitive stocks or ETFs or the futures itself. Next week is probably the extreme on the upside. Well, that's it for this week for our YouTube subscribers. Abbreviated look at a couple of markets compared to the full report that we do for subscribers. I hope if you liked what you heard, you'll check out our DT reports at dynamictraders.com. Take care.